What is up, everybody? Spencer Israel, Stock Market TV, joined by the one and only Jeff Macke from Macke's Retail Roundup. Jeff, we were just talking backstage. It's a bit of a bloodbath today. That's okay, though. That's okay. We're here to talk about the fact that we are basically just coming into retail earnings season. Jeff, you call it today Super Tuesday, right? Is that like a retail term, or is that just a U term?
That's a me term. I might be a little more excited about it than
Okay.
other people, to be perfectly honest. I don't know if many people call it super, but it was to me because we learned a lot, right? I mean,
All right.
it's we knew what Target was going to report. You were telling me I did a nice job with that. You know what? Because that's the quarter Target's reported for quite a few times in a row. Kind of wish washy on the tail end, but immediately warned. Immediately talked about how they were taking Q1 and the entire year lower than estimates because the consumer is uncertain and tariffs are bad, both of which are true, both of which are, kind of favored to be in the price there. But man, they took Target to the woodshed for 5%. Best Buy is getting it for 15%. They didn't really do anything wrong, Spencer. I mean, these were kind of okay quarters. And that's two of the three that we were watching. And the final one was On Holding came out early this morning, and they're from their underground lair in Switzerland, high-end running shoes, and they are selling the living shit out of it. And so, the blanket narrative, as always, that the consumer is just in terrible shape. On grew revenues 36%, apparel was up 77%. You know what? You're not buying a bad economy, $275 running pants. Like, that's just not a thing that's happening, So the consumer's not terrible everywhere, but man, it is just raining heat and acid on the high end guys.
All right. So let's run through a couple of these. I know you sent over some charts. We'll bring those up, and then we'll talk about a little bit, preview a little bit of what you're going to do with JC on Thursday. So let's bring up that on chart. Um, First off, who has better charts than Jeff? No one has better charts than Jeff. We'll start with that. So tell us again. So, okay, there's a random picture of Zendaya on here, I guess, because is she like the face of
She's their
On?
sponsor. They
Okay.
signed her. She's moving more product for this tiny little Swiss company than Caitlin Clark, the greatest female athlete that I've ever personally seen, is moving for Nike. As long as that dynamic's working, On's just executing really well. And so I'm looking for samples, Spencer, that I can take and I can trade into the future, into the quarters that I'm hearing out. So On reported great numbers. This is as good as you're going to get in terms of your setup on the long side. Coming down into that chart support, the stock has just been beaten like a redheaded stepchild for the last 3 weeks, 4 weeks, down in an absolute straight line, and they crushed the numbers. I mean, just killed it. There was just nothing to bitch about it on the entire call, and you're getting about a 4 or 5% pop. That's brutal. We talked about Best Buy being weak. They weren't that bad. They're down 17%. Your risk reward is still way to the downside. And you don't get hero points in March when you're getting just random tariff news. When all of a sudden Justin Trudeau is coming on and he's telling me that my cost of, whatever Canada sent us, bait is going to go up 25%. That's just kind of problematic. That makes the markets feel a little squishy. And, we're still seeing that kind of sell first and ask questions later.
So you're saying on they committed the cardinal sin of reporting good news on a bad day, because if
good news on a bad day.
Because if this was a good day, that could be up 10%, right?
Right. If this would have been a bounce back day, if people were willing to listen to kind of good news, to look past sort of the valuation, it's not like this is a stock you can't criticize. It's still a little rich, but it's super hard to find companies that are going to be growing at 30% on the top line with margins that are over 60%. That's just crazy. That's software type of margins for really expensive running shoes. When we hear from Foot Locker tomorrow, I guarantee they mention On and they talk about just how excited they are to have a partnership with them. That's 3% of Foot Locker's revenues. Unfortunately, about 50% come from Nike, so that's not going to save Foot Locker, but at least it'll be something they can talk about.
Wait, speaking of, I think we have, we have this Nike chart. I think you sent this to me yesterday, or you published this one yesterday.
Yeah. This kind of speaks to what, and Jason are going to go through all these, but we're just categorizing stocks. And these are kind of Starbucks and Nike are in the same position where they're companies that are kind of fallen giants. They've been dead money at best for like last 5 years. Nike hasn't moved a share, but the stocks are resilient. And we saw in late January a reversal of one of my favorite trades, which was buy every single stock in athletic shoe biz that you can get your hands on and just short Nike. That worked for a really long time. we're seeing signs of a bottom in Nike. If anyone's going to shake these off, what I'm looking for are companies that shouldn't necessarily be defensive. Starbucks and Nike have a lot in common. They're kind of, dented, if not tarnished brands. They've had a lot of kind of cultural problems. They got new CEOs in there, and they have every kind of exposure that should be bad in this marketplace, right? Tariffs, China, international trade wars, they get hammered on all of them. The stocks are not going lower. In fact, they're bottoming and looking for excuses to go higher. That's a trend reversal, or at least a place that you can hide your cash. Again, as we're going through earnings, the reaction really matters. And when companies are coming out with bad news that we knew and the stock are reacting this poorly, get out of the way. And that's what you can see just in the last month, on again, that setup for earnings today, it's down 20% straight into the number, and they crushed the number. That should be giving you like a 20% pop if you're going to be just kind of in a market neutral world where just tariffs and excuses to sell aren't popping up everywhere.
All right, I want to bring up some live charts. Actually, here's Target. Wait, let's pull Target back up. So this is not showing today's price action, but I think the theme of your chart it stands, right?
I think I sent you today. It's we're dwindling and going lower to the right. We're making new 52-week lows today, down 5-6%. The numbers were fine. The stock was up initially, but again, they immediately cautioned on the year. You're looking for red flags, and it's always a red flag when retailers blame the weather and the economy. Because if I just want exposure to weather and the economy, I'll go into the umbrella business and do it on the high end. And man, when the economy is good and it's raining a lot, I guess I'll have it covered. It's not a bet you want to make. If Target can't add value beyond just if it's raining, business is going to be bad. If it's sunny, it's going to be good. Then screw them. And so to warn after 3 weeks because sales were weak after Valentine's Day is a super bad sign. Stocks have to be sold. They have to be bought by somebody. Somebody has to be convinced this is a name that's turning around. And if you don't give me something to believe in, and man, I really want to believe in Target for a lot of personal reasons. I'm emotionally attached to them. I want them to win, and man, they're not winning.
But I think your observation here is that they guided higher in August, and then three months later, all of a sudden, oh, never mind, right?
Yeah. Again, you have to trust management at least a little bit, but that's they managed to do that. I've never seen that before. A company that said, "Oh man, things look just terrific in August," and then came in November and just absolutely crapped the bed. You got to get analysts and you got to get people on your side. Elf is part of their discretionary health and beauty. That stock is 50% off. We've seen a real bloodbath in a lot of these consumer names. Elf hasn't done a ton wrong. They move a lot of makeup through Target, and it apparently isn't been enough for that stock. But these are kind of some of the secondary plays where if we saw better health and beauty out of Target, if we would have seen anything other than just kind of all 5 categories that they sell in were kind of down a little bit. Apparel was down 2 or 3%. It just wasn't great. If we could have seen outsized health and beauty gains, that would have been a sign that maybe makeup's not as bad as the stocks are trading. As it was, maybe makeup just needs a little more time to cook before we kind of go into it. Abercrombie reports this week. That's a name I did up a chart for us.
This is great. This is a great chart.
They're a good company. It's a perfectly fine company. They're executing. They're hitting on all cylinders. You kind of want to buy the stock. It seems like it's gotten so much cheaper. It has gotten cheaper, but it's just been burning a hole. It's down 50% from the highs, 40% just this year, relentlessly sold on pretty good results that are maybe not on level, but there's a reason that Abercrombie went from 17 to $200, and it wasn't all just because it was a bubble. It's because they actually are executing really well. In this marketplace, executing really well gets you, not much a bag of donuts. I don't want to step in front of charts that look like that. That's just a frightening chart.
In more ways than one. I actually wanted to pull up some live charting for a second here. So here's Target. Here's Target today. Like you said, getting the beats. Here's Best Buy today. Just pretty brutal Although, actually the buying
I
the
mean,
dip
that
looks
reaction
good.
for Best Buy, these were not terrible numbers. It's not, it's a company that, they said computers were okay. They said no one's really buying kind of mid level TVs, but we knew that. So that's not a shock. But, Best Buy continues to just make this big ass base between like the kind of the mid low 70s and 80s and sort of can't get out of its way. They wanted to buy this at the beginning. They had this bid up to 90 in the pre-market. You can see it there for one brief little shining moment of optimism
Yeah.
and maybe everything's going to be okay.
I
No,
don't know.
no,
Don't
it's
look
not.
now. Don't look
And
now. They're buying the dip. So it's only down
yeah,
15% now.
yeah, here it comes. But I mean, man, you could have written this one in advance. And so 15% is a most draconian reaction to otherwise predictable news.
All right. Charts off. So we're gonna, I say we. Jeff is gonna go into a lot more detail on the space in general. He's doing a live stream with JC Peretz Thursday at 4 o'clock Eastern. The link is in the description. I also just put it in the chat. It's gonna be a free stream, but it's not gonna be on YouTube. It's gonna be on our website. So if you go to that link, you register. You'll get the watch link, and you'll get Jeff's Super Tuesday report he put out yesterday as well. And he's going to talk about sort of what we just did, but in way more detail. Talk about the trade war, who is most at risk, how he finds winners. If he's going to run through a few of his favorite names right now. We're not talking about Target and Best Buy and Abercrombie, right?
I mean, some of these are favored on the short. It's
Well,
levels of levels, man. We're going to try to make some money out of this mess.
yeah,
It's crisis opportunity, Chinese idioms. We can talk or
that,
whatever we want, but
that's the
it's not
bottom
all
line.
dark out there.
That's the bottom line. Is we are now in trade war 2.0, and it's going to have ramifications for companies that we all know. That's the biggest thing. Is these are companies that we know and we are fans of or not fans of, but we know them because we use them and we patronize them, right? With all due respect to Nvidia or Microsoft, I have no consumer attachment to them. Maybe Microsoft a little bit, but I've never bought an Nvidia chip before. You know, we're talking retail, we're talking consumer, we're talking Amazon, or we're talking companies, Starbucks, that you said, companies that we all know and see every day. And now these are the companies that are coming out with commentary and saying, yeah, trade war means this for our company, right? Trade war is good, trade war is bad, blah blah blah. I mean, no one's saying trade war is good, but you get the idea. So there's a lot happening right now in this space, and don't forget, what is the stat, Jeff? Like 70% of GDP comes from the consumer, right?
It's coming from the consumer one way or
Right.
the other, and so unless you have an end customer and they're not all tech guys, everything can't be a part of a car. You eventually got to sell the
Right.
product. It's all coming through retail and either discretionary or staples. Yeah, and these stocks are actually really moving. There's Best Buy a 15% move. People sneeze at this stuff because you get a lot of big, huge tech splashy names. Starbucks is up some 25% this year, some 45%
Yeah.
from the lows.
Don't look down.
That's not just kind of pricing in bad news, man. That's been a screamer. That's a great way to make money in a company that you can actually go in and say, how's Starbucks doing? I don't know. Did they get me my coffee in 4 minutes? Because the whole damn chain is incented by their psycho new CEO to get your coffee in 4 minutes. If they're not doing that, they're screwing up. But you can test it, you can see it, you can feel it, and you can have a cup of coffee. What's not to love?
T-Lock in the chat is asking about Dollar General. Maybe on Thursday. I don't know. You'll have to be there to find out. So there was the link once again in the chat, in the description. Click. It's a free event. You don't have to do anything. Just enter your email. And like I said, you'll get the watch link and you'll get Jeff's latest free report to go with that. Other than that, like I said, it's retail earnings week or it's retail earnings season. So between now and 48 hours from now, there's going to be a lot happening. From a news flow perspective, from an earnings flow perspective, we're going to cover all of that and just go into it in a lot more detail on Thursday. And yes, as Jeff said, the bottom line is, how do you make money? That's what we're all here for, right? Opinions are great, money's better, right? So Jeff's going to talk about all that with JC on Thursday. You have the link, check it out. Jeff, thanks for doing this with me. I know it was spontaneous, but that's what we do. And we'll see you guys on Thursday, all right?
Anytime, man.
All right.